Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 17th, 2024, and I'm here to bring you trading levels in the major market indexes for the upcoming week of May 20th, 2024. We will take a look at the SPY, the QQQs, the IWM, and we'll also take a look at the bonds as represented by the TLT ETF. Before we get going here, the usual disclaimer. Precision Trading Labs, we are neither money managers nor financial advisors. We do not provide investment advice. Everything we do is to help our subscribers to become confident traders. And so everything that we present is for informational and educational purposes only. So there you go. So at any rate, taking a look at the SPY, which of course is the ETF of the S&P 500. We actually hit all-time highs with this week, as well as with the QQQs. That was actually spurred earlier this week by a data release of milder, cooler inflation numbers for the consumer price index, and that actually triggered a rally. And so that's what we're looking at right here. So we hit all-time highs, and then we kind of backed off from that a bit. But we're obviously sitting right within a whisper of that. So that's where we are now. So if we take a look where we are, immediately below us, there is a drop base rally formation in either the daily chart or the 2-hour. Mostly, we're looking here at the daily chart, and we kind of refine. We'll oftentimes refine the daily by looking at the 2-hour, but really this is more or less kind of a daily demand zone here. And this is a drop base rally, and that's characterized by an exhaustion of sellers after this period of consolidation, and then that's the origin of this very strong move. And so what happens here, of course, is that willing buyers effectively have to run up the price chart until they encounter willing sellers. And so that's the evidence of this. This is the footprint of that price activity. And so if we think of the shares of being acquired by the buyers as demand, and we think of the shares that are available and that are sold by through the offers as supply. Right in here, supply and demand are in balance, and then it goes out of balance here by the exhaustion of sellers here. And so when price comes back here, really what's left in here is only demand. There is no supply anymore. Hence, we would call this a demand zone. And so when price returns to this demand zone, there is the expectation that there is still upward price pressure waiting to be tapped here. And so this would be the place where we would express a bullish trade. And of course, the most direct way to express a bullish trade and in anticipation of a bounce from this level would be, of course, to buy the SPY. But of course, the other things we could, of course, do would be to buy a call or do a bear call, excuse me, a bull call, vertical debit spread, and of course we could also do a bull put vertical put spread in order to collect premium, and that would be another way of expressing a bullish trade out of this demand zone here. So that's the story with the SPY. And so right now we're sitting about 1.5% down from where we are now. We closed at about 529.5, which this demand zone begins at 521.5. So that's about a 1.5% drop. So obviously that could be we could be hitting that in fairly short order when next week starts. So we'll be certainly looking out for that. Okay, so that's the story with the SPY. Since we came off of all-time highs here, there is actually no supply zone here for us to look at. There's nothing to push off of here yet, so we really would not be looking to short anything on the SPY. Okay, so if we take a look now at the Qs, you'll see here that the Qs kind of while the chart is not exactly, while it's not a mirror image, it certainly rhymes. And so right here we have a rally base rally formation. That should obviously look relatively familiar in terms of the SPY chart that we just looked at here. And so right here we have a demand zone here. Again, that's about 1.5% down. And then after that, there's really nothing nothing to speak of in terms of a clean demand zone of quality until we get to about here. And so that's about 5% down here. So this more or less is the same trade as the SPY. Okay, so that's what we would be looking at here in terms of the Qs. And again, there's no supply zone here, and so that's the story with the Qs. If we turn to the IWM, which is the ETF of the Russell 2000, we finally do have now actually some supply zones to look at here. So looking back first at demand, right here we have that drop-based rally formation, and that's really the first area of clean demand where price has not returned, where price has not returned or tested any sort of zone. Okay, this is a clean zone that hasn't been tested. Over here, there is all of this trading that goes in here, and so this is really the area that we would be looking to buy. Okay, and so that's about 3% down here. Okay. On the other hand, if we look above, unlike the other two indexes, there actually is some area of supply, and so this is the exact inverse of what we looked at before. And so if we go back in time here, you'll see that right here there is a supply zone right here. We have a rally-based drop formation here, and that actually got created. That's actually about 2 years ago. This is at the beginning of 2022, and so we have not been back there. We have not been back there since. Okay, so here's where we are now. So we're okay, and so that's about 4% above where we are now. Unlike what I talked about before with demand, this is the exact inverse. This represents an exhaustion of buyers here. Okay, and so right here, supply and demand were in balance, and then essentially there was an exhaustion of buyers, and so all that was left here was supply. Hence, we call this a supply zone. And of course, the way we would express a trade out of that supply zone would be to either short the IWM or to buy a put. And of course, one could also do a bear put vertical spread, vertical debit spread, and of course one could also collect premium by doing a bear call vertical credit spread. Okay, so those would be all the ways we could express a bearish trade out of this supply zone. So that supply zone is about 4% up, and then the demand zone is about 3% below. Okay, so that's the story with the IWM. And lastly, we'll conclude by taking a look at the TLT. The TLT is the ETF of longer duration U.S. bonds, 20 years of expiration and beyond. So that's what we're looking at here when we're looking at the TLT. Here's where we closed here at around 91 point, about 91.5, and so immediately below here, about 1% down, there is this rally-based rally formation. Okay, right in here is where supply and demand were in balance, and then right there was the exhaustion of buyers, exhaustion of sellers, and that's where we went out of balance. Okay, incidentally, I've been talking about these supply and demand levels. If you look below this video, you will see that there is a link to another video that I did, and that's a quick deep dive into the whole concept of supply and demand. And so for further information, and I would suggest take a look at it, because it's actually pretty informative, and it'll give you some more insight about the foundation of our trades here at Precision Trading Labs, which are all based on supply and demand. Okay, so here's the TLT. So we have that demand zone about 1% down, and then we have a supply zone above. Okay, and that's about 3.5% above here. There is this little bit of trading here, but it's kind of gappy here, and so there's really no clean supply here. But right here we have a very clear rally-based drop formation here, and so this would be a good area that we could express a bearish trade, as I described earlier. All right. So at any rate, that's the story with the TLT. So thank you very much for your attention, and I will see you next time. Take care. Bye-bye.